I now hand the conference over to Mr. Shivmuthu from CDR India. Thank you, and over to you, sir.
Thank you, Steve. Good evening, everyone, and thank you for joining us on this earnings call, organized to discuss the financial and operating performance of Everest Kanto Cylinder Limited for the fourth quarter and financial year ended 31st March 2021. We have with us today Mr. Puneet Khurana, Managing Director, and Mr. Sanjeev Kapoor, Chief Financial Officer of the company. Before we begin, I would like to state that some of the statements made in today's call may be forward-looking in nature. A detailed statement in this regard is available in the Q4FY21 results presentation that has been sent out earlier. I now request Mr. Puneet Khurana to start the proceedings of this call. Over to you.
Okay, thanks, Shiv. Good evening, everybody. I welcome you all at the Everest Kanto Cylinder earnings call to discuss the operating and the financial performance for the quarter and financial year ended 31st March 2021. I would like by talking briefly about the background of our company for the benefit of those who have not followed the company closely in the recent period. I will cover the Q4 and full year financial and operating performance and the key underlying business drivers. EKC has been in the business of manufacturing seamless steel gas cylinders over the last 4 decades. In this period, we have delivered over 20 million industrial and CNG cylinders, and we are leading manufacturers in India with aggregate capacity of over 9 lakh cylinders annually. For this, about 7 lakh cylinders capacity in India and 2 lakh cylinder capacity in aggregated across our overseas operations in UAE and United States. Our range of products include industrial, CNG and jumbo cylinders used for high pressure storage of gases that have application in manufacturing, fire suppression systems, medical establishments, aerospace, defense and automobiles. With India expanding focus on large gas fueled economy, EKC is well poised to the benefit. The country targets 50% contribution from natural gas in its primary energy mix by 2030. Driven by economics, environment and efficiency led objectives, as a result, adoption of gas in the Indian economy across various diverse applications is visible, and will believe this trend will continue to take shape in the visible future. This includes rapid expansion in country's CGD network over the next 5 years, with extensive nationwide coverage that has provided easy access of CNG to a substantial number of vehicle owners in the country. Linked to this is expansion of vehicle ecosystem that is resulting in leading automobile manufacturers developing more models and producing more volume of CNG vehicles, buses and other fuel on CNG. As availability of CNG scales up across the country, with thousands of pumps being set up, we expect secular demand growth in this space. At the same time, in our position as a leading manufacturer of high-pressure gas cylinders in India, we are proud to remain fully committed in India to fight against COVID since April 2020. During this period, we have supplied over 4 lakh medical oxygen cylinders to the central government agencies, defense establishments, several state governments, as well as hospitals and NGOs across the country, thus making a positive contribution in securing the health of our people and community in times of crisis. Simultaneously, we have also maintained a considerate view towards the safety of our staff and their families, who have supported our initiatives with complete dedication. Currently, our plants have been operating at optimal capacity. To expand output, we have invested in several debottling initiatives to drive manufacturing efficiency at our Tarapur and Kandla SEZ. These investments have yielded strong ROI by allowing rapid expansion of output within existing production framework and allowing us to address key pockets of demand. From our perspective, that also creates a bridge that allows us to grow as a business as it takes forward our new greenfield expansion, announced earlier, that will further expand capacity 2 lakh cylinders. As indicated, we propose to use of the available equipment for this project. Cost will be significantly lower at rupees 45 crores, to be financed largely from the internal accruals. Coming to the financial performance, during FY21, EKC revenue expanded by 25% to 949 crores, which is by far our highest turnover in more than 4 decades of operation. EBITDA was higher by 72% to rupees 164 crores. Profit before tax, before exceptional items and foreign exchange variation was up 362% to rupees 106 crores. These are strong growth numbers, and we believe that revenue visibility remains positive in the current year, and margins are sustainable based on the demand outlook from the multiple segments. Also in Q4, we recorded the highest ever quarterly turnover in India business as well on consolidated basis. Gross margins and operating margins have remained strong in the domestic business as we gain scale based on several debottling initiatives. I talked about it earlier. Reported Q4 profits on consolidated basis have been subdued based on some year-end provisions and exceptional items. In US and UAE, we have some one-time provision during the Q4 related to inventory, write-down contingencies. However, we see a visible improvement in the outlook of the business in both these geographies. In the current year and forward, I look forward to substantial progress in the near term. As you know, EKC International Dubai, our wholly owned subsidiary, will partner with Rev Gas Industrial Limited to set up a state-of-the-art high-pressure vessel manufacturing plant in Hungary. We own 80% of the JV that will address EU market for the industrial cylinders, which we estimate at 2 million units annually. The project will be supported by cashbacks and tax rebates available from the local government as well as low-interest bank loans. These initiatives make the business case even more stronger as we get the opportunity to establish in EU as a home market. To close, I would like to say that overall, while we look forward to leveraging our position to drive profitability growth, we also continue to focus on structural organizational improvements to drive the framework from a longer-term value creation across all various initiatives. On that note, I come to an end to our opening remarks and would request moderator to open the forum for any operational and strategic-led questions that you may have. Thank you so much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Venkat Modi from OHM Portfolio. Please go ahead.
Hi, thank you for the opportunity. So, could you please share the volume numbers for this year, volume sales numbers for this year and last year in standalone as well as consolidated?
Volume numbers of
cylinders being sold.
So I think we've sold over 700,000 cylinders in this year. 7 lakh cylinders.
And which was last year? What was the number?
Around 6.
6 lakh.
Yes, 6 lakhs.
What is the number in consolidated?
Yeah, that's the number. I'm giving you console numbers only.
So these are console numbers or standalone?
Yes, these are console numbers.
Okay, fine. And could you please elaborate on the Hungary opportunity that you recently ventured? So what is the market size there? How are the demand supply dynamics, and what is going to be our overall investment there?
So on the investment part, we are still finalizing everything. The value and all the details are still being getting together as for the value is concerned. But as for the European market has a demand of around 2 million cylinders. So the demand is there quite huge for cylinders.
Okay, and our partner. So I understand our role will be that of manufacturing. So what would be our partners' role there? Are they just financial investors, or they would have some sort of role?
They are in both strategic and financial. They are also in the industrial gas business. So they obviously become the direct consumers of the product.
Okay. But apart from that, would they be acting as distributors or?
Yeah, kind of. You could say that, yes. That could be, because it's a strategic partnership. So, definitely that will be one of the, because you will have some commitments of buyback from, they are gas suppliers, right? So, they have filling plants and other things. So, they will definitely be, it will be like a strategic partnership where they buy back whatever capacities we manufacture, some percentage will be bought back by them.
All right. And sir, could you please give us sales breakup between industries? I mean, how much is auto, how much are the other industries?
You could say it's around 60-40.
60 is auto?
Yeah.
Okay. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Samar Srivastava, an individual investor. Please go ahead.
Hi. Thank you for the opportunity. I wanted to understand, the issues in the U.S. business, because you've been saying for a while that things are looking up, but we're not seeing it in the numbers. And this quarter had a significant goodwill write-off. So if you could just spend some time explaining what's going on there, why you're still sticking to it, what opportunity you see, and how soon do you really see things improving? Can you be a little specific on that?
So, I think, the U.S. business, they always, COVID has been this thing that, big reason why the business has been affected very badly. U.S. business has always been predominantly focused on, defense sector, industrial gases. So that has been the all the orders that the company had been delayed because of this COVID, and a lot of government projects went on hold. But now, also U.S. had a change of guard as per the new president. So all these things, had been an issue that had slowed down the U.S. business. But now we see that things are coming back, and we are quite optimistic that from the, it should be much better.
Yeah. Were things better in the April, May, June quarter?
Sorry?
Were things better in the April, May, June quarter compared to Jan, Feb, March?
It will be better. Yes. It will be better.
Could you explain the goodwill write-down, and is that a one-time thing, or could we be seeing more goodwill write-downs, more inventory write-offs, etc., going forward as well? I just wanted to understand if that's done, or we could see more of that.
Okay, Kapoor.
Yeah.
Sanjeev.
Yeah, this is Sanjeev here. See, the goodwill write-off normally, as per the accounting standards prevalent in India and US are different. So US has done it now, whereas in the past, on a consolidated basis, we have already affected the goodwill write-down in 8 years. It's starting from 2008. So it's a one-time, obviously. It won't be repeated because we have written off the goodwill.
Okay. And things like the inventory write-down, is that done and over, or could we possibly see more of that this year?
It was one time, that's what we are saying.
Okay. I had some, with regard to Dubai, while your cylinder volumes were lower, your top line did fine, and I think before accounting for the China money, that business made a profit. So I just wanted some sort of outlook for the Dubai business for this year as well.
Yeah, definitely. COVID has been a big, has affected the international business. So definitely you'll see, things a lot different going forward.
Okay. And last question on the dividend payout. Now, the company earned a fair bit this year, and we were expecting, or at least I was expecting a slightly higher amount. So I just wanted to understand your thought process on the rationale, because I think you have enough.
The decision of the board to really on this, so.
But as the MD, you may have a comment, right?
I think we started to go down this road. I think we'll continue to keep. We would like to, the board also would like to see a consistent policy. Where the company shows that they're consistently going to be a dividend paying out company, not just a one time thing. So we would that's why they will they would like to have this kind of dividend declared at this time, and then consistently be consistent about it.
Okay, great. Thank you for your time. Thank you so much.
Thank you.
Thank you. The next question is from the line of Sachin Kasera from Swan Investment. Please go ahead.
Yeah, good evening, sir, and congrats for a good set of numbers. I had two queries. One, if you could just quantify, you mentioned regarding certain one-offs in Dubai and USA. So if you could just quantify them either for the quarter or for the full year, that would be very helpful.
1 minute, second. I'll just give it to Mr. Sanjeev Kapoor.
No, if we talk about the exceptional items, I'm sure there was some impairment in India also.
Mm-hmm.
So, are you talking specifically about the exceptional items?
Yeah, well, so because what we are seeing is, for example, when we see the segmental numbers that you reported, it looks like, for example, when we see Dubai, while the turnover has gone up from 29 crores to 34 crores in the December to March quarter, from 12 crores the EBIT has become 10. And so similarly in USA we are seeing a lot of 24 crores.
Probably I'll have to give a full reconciliation because this will not be appropriate to bring out those numbers because there are a lot many entries which are there. So the point remains that whatever is there, I mean, it's in our note itself we have given the details.
No, but sir, those are not adding up. So if you, without giving the specific breakup, if you could, so for example, when we see the segmental numbers, it's a little confusing. For when we see the segmental
I can separately share all the numbers with you because here, I mean, it will be taken a long time to explain how the numbers go.
Sure.
On consolidation, lot many gap adjustments are things there. So ideally, it will be appropriate if we can
Sure, no issues. Sure. Secondly, in terms of the cash flow from operations, when we see, despite a much higher EBITDA, what you reported on a consolidated basis is 85 crores versus 105 crores last year, mainly because of the sharp increase in trade receivables. So if you could just highlight something on that, is it like a one-time phenomena or is it that we have changed the credit terms and, just to increase the sales?
So see, it's like our debtors turnover are quite matching. If you see our turnover, I mean, it has expanded substantially from our last year. So when you compare, obviously, the comparison is, bound to, it's quite in line. The debtors turnover is quite in line, sir.
Okay. And lastly, this volume that you gave of 7 lakh cylinders, that you said was consolidated. So can we agree with the breakup between India and Dubai?
I think we just would like to, just keep it on the consolidated basis only, the volumes.
Sure. And this 45 crores capex, that is the phase 1 or phase 1 will be much lower? This 45 is all three phases put together, the capex that you have mentioned in the presentation.
Yeah, all three phases.
How much will the phase 1 cost us, sir?
Yeah, 15.
Okay. And all three phases cumulatively will add 2 lakh cylinders, right? Or is the first phase is 2 lakh?
Yes.
Okay. Thank you.
Thank you.
Thank you. The next question is from the line of Sunil Jain from Nirmal Bang Securities. Please go ahead.
Thank you for allowing me to ask the question. So my question relates to more of other expenses which has increased substantially in this quarter, both year on year. It is I'm talking about consolidated results. So it is at around 57 crore odd. So any specific reason or any exceptional is there in this particular item?
See, one is you have to consider that it's in line with the turnover. So once you add the turnover, then only there's a little additional amount, which is because of various provisions we have taken for yeah. So there are some provisions which have come in.
That is all one time.
Yeah, all one time.
Can you quantify that amount?
Quantify, I don't have that right up.
Approximate figure if you can. Because it is a jump of almost from 37 to 57, so 20 crore it has increased, whereas the turnover is not increased.
It's around 10 crores.
10 crore.
Yeah.
Okay, fine. And sir, second thing, in India, what was the at what plant capacity utilization we are running in Q4 or whatever figure you get?
If it's around 90%, yeah, and what we've done last year, we did a lot of efforts on debottling, so that has got, has given us some good results.
Yeah. So that was my next question. Like our new plant will be coming maybe after 2 years or so. So till that time, we will be stuck up with lower capacity. There is an opportunity, and we are not able to grab that.
Yeah, right. So again, this year also we will further continue the debottling, and may able to at least get maybe 15% more through this process.
Okay.
So we'll continue to do what max we can do, and then finally we'll have to wait for the new facility to come.
So at least 15% volume growth can be expected.
Can happen now from here. Yeah.
Okay, sir. Fine. Great. Thank you very much, sir. I'll come back in with you.
Thank you. The next question is from the line of Jimesh Sanghvi from Principal India. Please go ahead.
Sir, you said the existing capacity of new capacity will be added up at 45 crore. What will be the amount in terms of capacity that will come under the first phase out here?
It's around 2 lakh cylinders.
So that is first phase itself will be 2 lakh cylinders, or over the 3 phases it will be 2 lakh cylinders?
No, see, the total capacity is 200,000, right? So, you know what, what do you put this first phase is just so, the investments, I think, investment is just staggered. So we just, put it that it will be a 200,000 cylinder capacity. And, it's just that we've, we have to set the plant up and, other things. So, we've just put it in phases. So it will eventually, come in a period of 18 months.
So in terms of our ability to sell volumes, will we be able to kind of sell some volumes out of that in F24, or it will be only after all the 3 phases are completed that we'll be able to sell some volumes from this?
Yeah, after completion only.
Okay, after completion all the 3 phases.
Yeah.
Okay. And so secondly, with the kind of increase that we have seen in steel prices, will we see any kind of a hit in terms of margins going ahead, or probably that's largely a pass-through?
Yeah, it's largely a pass-through, yes. We are able to pass it through.
Okay. And just one clarification, you said other expenditure included 10 crores of one-off, right?
Yes. Yes.
Okay, fine. Thank you.
Thank you.
Thank you. The next question is from the line of Deepak Mishra, an individual investor. Please go ahead.
Good evening, sir.
Good evening.
So, my question is, can you just mention your current debt and how much we are expecting to release them?
Sorry? What? Current debt? Sorry?
Your current debt.
Current debt? Did you say debt? Oh, okay.
Yeah, so the console is 200 crores on a console basis, and standalone India is 114 crores.
So, when we received amount from China, so we were supposed to reduce it.
So we have reduced close to 50 crores of our debt if you compare from the previous.
So all our long-term debt in India has gone.
Mm-hmm.
Yeah.
Okay. So, sir, what is your growth expectation for FY22?
Sorry, say that again.
Can you repeat, sir?
What is your growth expectation in FY22?
Growth expectation,
yeah.
I think 15-20% we can take.
Okay, so 20%.
Yeah.
Okay, sir. Thanks a lot.
Thank you.
Thank you. The next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Yeah. Namaskar, sir. Thank you for the opportunity. Sir, firstly, I'm referring to this news article sometimes at the end of May, wherein it has been mentioned that the Central Medical Services Society Health Ministry has blacklisted the company for 2 years for cancellation of some 44,000 oxygen cylinders. Could you throw some more light on the same and its impact on our further being L1 in a government order?
So, company has been, during this COVID time, we've been taking a lot of initiatives to meet all orders from all agencies. And, we have been facing a lot of challenges on, oxygen supply and other things. So, there has been, some unavoidable delays in meeting these schedules and commitments. That is the reason why this kind of thing has come up.
So what is the status right now? Are we we will be blacklisted for the 2 years that has been being mentioned?
Our continuous. We are definitely in talks with all related parties, and who are taking up this matter to explain our situation and the circumstances that the company has been going through during this period. Because this has been a challenging time for everybody, and we have been, because the company has not been receiving liquid oxygen for manufacturing, manpower issues, COVID issues. So we have been, and plus pressures from all other government agencies to supply. So there has been a lot of overwhelming pressure on us. So definitely we are trying to highlight this point to the CMSS, and trying to explain to them again and again that this has happened, and please understand the circumstances that this was involving around this situation.
One very small understanding, sir. What kind of business have we done with this with the government authorities, especially this CMSS, over a period of time, or was it during this second wave period only that we were awarded?
We have been supplying to CMSS in the past also. We have supplied around 40,000 cylinders last year also to CMSS.
Okay. So that is around more than 10-15% of our volume. Not 10%, sorry. Around 12.
Yes. Around less than 10%, but yes, we have supplied that to them last year.
So as of now, we won't be able to participate until and unless the clarity is given.
No, we are in continuous discussion with them on this matter. We are in continuous discussion with them on this matter and trying to resolve this issue.
Right. And when can we hear more about it, sir? Anything in the annual? Any date or anything, if you could share?
These things, we definitely, what we'll do is we have your contact details, and anything good news on this, we'll definitely, send out a mail or something.
Yes, yeah. Sir, on the raw material sourcing front, sir, as in your presentation, the seamless tubes part has been mentioned. So are we sourcing the same domestically? What portion is being sourced domestically, the seamless tube? And what is
domestically? We have recently just kind of started. We have not really it's still under a lot of development. It's I would say just in development stage. You could say that. So I cannot give you that there is some percentages have been started sourcing. It's just in the development stage at this moment.
Yeah, because we were reading about this United Seamless also now coming up with this cylinder, and Jindal Saw also.
Right. So we are definitely working closely with we're trying to work with these partners closely to see that this development can happen.
Achha. And sir, lastly, sir, if you could give me the mix of our customer, I missed it in the earlier commentary. Out of the 7 lakh of this, our customers to whom we are servicing.
60% would come from the CNG, and 40% would have come from industrial.
Okay, and 41% industrial. And sir, what is our cost of funds, sir? Blended cost of funds, the long term as well as the working capital requirement. And what is our currently working capital requirement?
I think around last year, working capital requirement. So around 11% last year.
Okay.
So our working capital limits are around 125 crores total.
Limits, okay, sir. I was looking at the cost of fund. That is 11%.
Yeah.
Okay. Then lastly, about your ratings, sir, also. How is our debt rated? What is the rating we are Gardner, and when is the rating?
As of today, it's BBB minus.
Okay. And when is the next review due? I think the number.
Based on the balance sheet, the rating agency would take up our case.
Right, sir. I'll come in the queue, sir, for the follow-up, sir, and all the best. Thank you.
Thank you so much. Thank you.
Thank you. The next question is from the line of Sachin Kasera from Swan Investment. Please go ahead.
Hello.
Sir, you may please proceed with your question.
Yeah. Sir, this 10 crores one time, that is for the full year or for the quarter that you mentioned?
No, see, this was a full year. It's appearing in full year balance. Maybe some part has come into console in a quarter.
Okay. And you mentioned that you can squeeze out 15-20% more. That you are referring on a full year basis, because Q1 you did 125 crores and this quarter was like 250. So when you're referring on a full year basis, and when we say look at the Q4 number, you are at almost full capacity, can we assume, or even in Q4 we had some scope to improve?
It will grow from there.
Okay. Thank you.
Thank you.
Thank you. The next question is from the line of Bhavin Salot, an individual investor. Please go ahead.
Sir, my question is, you mentioned that there is a total debt of 200 crores and the China money came exactly on 31st March. So, out of that 50 crores, the debt has been reduced as we stand now. So, my answer would be that now the debt is close to 150 crores. Is my understanding right?
Sir, in fact, we had settled the debt earlier only. But yes, beyond that, we have on 31st itself, we repaid some amount.
Okay. So, no, so the 55, if I'm not wrong, 55 crores came to India.
Yeah.
So, can you give us the number? What was the amount paid on 31st?
Not in India. We paid in, we didn't pay in India. India we had paid earlier only. This amount is lying in our bank account. If you see our cash and bank balances, you will find this amount.
Okay. So, the debt which you say 200 crores is still now the 200 crores only, right? It's safe to say that?
Yes.
And with the debt paid in the last year, the effect would be seen in this year. What would be the interest saving that would be there? Could you quantify that number, or there will be no saving because of the growth, that money will be utilized in the growth?
No, see, since we are holding some cash in hand, obviously there will be saving because our limits have been underutilized.
Okay.
So there will be saving.
Okay. And sir, when you say that 7 lakh is the consolidated capacity of the whole EKC around the globe, right?
This was manufactured. This was the cylinders manufactured.
Yeah, that was the cylinder manufacturing capacity, right?
The capacity is different. This is what they asked us to. The gentleman asked for the volume, so we had given him the volume that was manufactured.
Okay. So then, what is the capacity which you have in India? If you can throw that number. What is your India capacity maximum output which you can come to?
Around 7 lakhs.
7 lakhs from India.
Yeah.
And we saw that in this quarter there was a lot of money burn issue in US. Is there settled, or can we see still something more is to be happened?
It is one time.
Because that has affected the consolidated numbers.
Yeah, so I mean that was all one time, and quite a few things are not cash burn; they are actually provisions.
Okay. And sir, last question. You mentioned that there is a capex of 45 crores, and until all the 3 phases go, you will not be able to utilize that capacity. Sir, my recommendation or my suggestion would be that 45 crores is not that big amount, and you have profitable last year. This year also you will be profitable. We should try to push it forward and make it faster, because otherwise.
Yeah, the thing is not the funds, So I think, what we were trying to explain, that the way the funds will be flowing, because I can only see a building, when you're making a building, will only take a specific amount of time that will be required to make the building. Okay. Right. So, that when we say phase 1, phase 2, phase 3, it's actually just trying to say the way the money will move in 3 phases. It's not really the capacity build-up, but it is the amount that, the time that we are trying to, the money that will be required in 3 phases. That's what we are trying to say. Correct? Yeah, is that the right way? Yeah. So that is the why we are saying the 3 phases. So just to explain you how the money movement will be, but definitely we would like to spend all the money today itself, if it's possible to, get the capacity done.
Okay.
Yeah. So money is not a constraint for us, for the expansion. It's money, equipment is not a constraint. It's only it's actually to get it done, to do all the activities. The time that will be required.
Okay. And sir, some years back, it was mentioned in one of the notes that money was lended to Hubtown Builders. What's the update on that?
I think that's closed entries. Yeah, these all done, all settled. There's nothing outside.
So have they returned the money? Have they returned the money, or what have they done?
I think they've returned the money, right? Yeah.
Partly returned and partly.
Yeah, partly the money has been returned, and partly we have company has taken some properties.
Okay. So company is planning to sell that or utilize that property?
Of course. So we are always, looking at an opportunity where whichever properties which are not of any use to the company, we are definitely looking to sell it.
Okay.
Yeah.
Thank you.
Thank you.
Thank you. The next question is from the line of Venkat Modi from OHM Portfolio. Please go ahead.
Yeah, thanks for the follow-up. So you said that your console volumes last year was 6 lakh. Am I correct?
Yeah.
Annual report says you sold 6,80,000.
Sorry,
your annual report says, FY20 annual report says that last year you sold 6,80,000 cylinders.
1 second, let me recheck the volume. Yes, you're correct.
It is for console.
Yeah, you're right, yes.
So what is the console number for this year?
780.
So 680 goes to 780.
Correct.
Within Hungary and US top line, what is the Hungary sales and what is the US sales?
You mean the annual? You mean the annual? 89 CR.
Pardon?
89 crores.
No, I'm saying what is the split between US and Hungary?
No, US, Hungary is just a holding company.
Oh, okay, so the entirely everything is...
Exactly. Yeah.
Okay, and the new additional capacity of 2 lakh will be available for commercialization from when?
So, like we already announced the expansion. That is what we are planning to do now in India and Hungary.
Right. So when will this 2 lakh be operational? That's my question.
18 months.
Okay. Fine. Thank you.
Thank you.
Thank you. The next question is from the line of Deepak Mehta, an individual investor. Please go ahead.
Hello.
Yes.
Yeah, good evening, sir. Thanks for the opportunity. My question is around the growth for next 3 to 5 years. So you have already given some rough guidance of around 20% for this fiscal year. So if we see, due to scrappage policy and BS6 and CNG adoption, and we are seeing industrial capex as well. So can we see in next 3 to 5 years around 20% CAGR?
Can we I didn't follow the question. No, he's saying what is going to be the consolidated growth you see in the next 20%. Can you give 20% guidance on that?
Guidance we can't give, but surely we can give for the near future.
Yeah, so what is the thing you want to say?
Capacity, obviously. Yeah, so we are building up capacity. So obviously, once the capacities are built up, I mean, you're well aware that is the quantity which probably will add up.
Okay. So what can be the drivers? What makes you, to do these capex? What tailwinds or growth expectation, if you can throw some light, sir? Is it CNG or industrial?
Yeah. So CNG is definitely the driver.
Yeah.
Yeah, that will continue to where we will continue to make investments.
Okay, sir. And I missed, what will be the capacity for Hungary project?
Around 240,000.
240. And when it will be, gets in production and commencement of the factory?
It's still in the working stages. I think maybe in the next call, maybe next quarter call, we can be more clear about this.
Okay. And in international markets, so my last question, in international market, due to, anti-China sentiments, are you seeing any positive, business query or business opportunities? Thank you.
No, I think, things are like they were previously, so there is not much change, as far we are concerned on the India-China relationship as far as business is concerned.
Okay, so thank you. Thank you so much.
Thank you. The next question is from the line of Prakash, an individual investor. Please go ahead.
Hi, good evening. This is Prakash here. Congratulations on a fantastic set of numbers.
Thank you.
Some impairments there, understandable, totally understandable. And I was listening to the various interesting questions that were asked and which you answered to. Just one thing, in one of the questions you said that the steel price increase is taken care of and it may not affect substantially the profitability of the business. So is that being captured because you are able to get a better realization from the market, or is it profit?
When we see most of our customers are all multinational companies and OEMs, so there we are able to have some kind of system of pass through. So we may not able to get a larger realization from the market. We are just getting we will not be affected too much on the steel prices. So we'll be able to keep the margin intact going forward.
Just one more thought which I have is more of a kind of an outlook question.
Yeah.
See, generally EKC has not been very successful in managing businesses. In like for example, the EKC subsidiary in the US has not been, traditionally it has not been doing well. So and the management issue, the culture issues, or whatever, and now you are going into European markets. Do you foresee any kind of management challenges in managing businesses out of those geographies, or are you confident of? Is it also one of the reasons why you have chosen to have a strategic partner in the European market?
Yeah, correct. So that is one of the reasons why we've chosen a strategic partner. And of course, now, with more focus on, we have been like we are out of China now. So we are trying to only focus on the businesses where we feel that the bandwidth management can control the aspects of the business. So I think definitely going forward, that has been on the mind of the management, and we are continuously taking care that things are completely under control as per the new expansions or the existing businesses that we are doing now.
So one suggestion I have, maybe you can try to have the same experiment run in the US market. Actually, because I think strategically speaking, you should be seeing US as a very significant market for the fact that you are in the business of manufacturing, like cylinders, high pressure vessels, and those kind of things, those kind of competency that you have. And with the new administration giving a tremendous amount of focus on rebuilding the U.S. infrastructure, I would suspect that a lot of gas-based transportation, things will, there will be an increased demand for your product in the U.S. market.
Right.
I believe traditionally you have been working in the U.S. defense services, particularly the ships and the navies and those kind of places. But I expect that you might expect that, there should be a good demand pull from this massive budgetary allocation that the U.S. government is wanting to make towards rebuilding its infrastructure to the new age infrastructure status. So in that context, why don't you consider identifying or finding a partner in the US who understands that culture much better, or kind of having a management which is more closer to that business culture and probably kind of gives a different outlook, because obviously the market is a big market. Traditionally, the US is a very important market, and now that market size should expand for you. So, do you have any thoughts on those directions of trying to find out somebody?
I think you made a good point, and definitely we are also thinking in the similar lines, and going forward we definitely are much more conscious on the investments and the opportunities there. So definitely, yeah, these things are all on our mind, going forward.
So very happy to kind of enable some of those things, because I think that like your business should demand a kind of a more closer look at that market.
Yes, you're right.
And there's a tremendous opportunity there. So, okay, thank you very much and best of luck. I hope you keep shining and keep doing better. Thanks.
Thank you. The next question is from the line of Nishit Shah, an individual investor. Please go ahead.
Good evening, sir. Sir, I wanted to understand the raw material side. So, are we facing any transportation issue or pricing issue or any availability issue?
No, there is no transportation. There is no issue on. But definitely, price is an issue because steel prices have been going up. Yes. So definitely the steel prices have been going up.
Yes, and that we are able to pass it on. Yes. So our gross margins have also increased quarter on quarter. So going forward, do we feel that we'll be able to maintain our gross margins at current level?
Yeah, I think it should be okay. We should be able to.
That's great, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Anil Kumar, an individual investor. Please go ahead.
Good evening, sir. Sir, my question is related to the American subsidiary. The first question, there is a lot of discussion. Sir, are you expecting this to turn around this year, or it will take longer period? Number one. Number two, regarding medical oxygen, we are selling to the CMS only, or we are selling to medical oxygen through other agencies also?
So, pertaining to US, definitely, we are very hopeful that, now that COVID is behind us, hopefully this, things will be much better going forward.
Excuse me, last meeting also, sir, you said the same thing, but is it? I know it is not in your hands always, but we are worried about that. It is.
No, but we are more confident now. Things are looking up.
Right. And regarding, sir, medical oxygen, we have stopped due to this ban. We are banned from all the agencies, or only through CMS? All medical cylinders are sold through that agency only, or we are able to sell through other agencies?
I think we made the point quite clear in the last discussion.
So we are not able to right now. We are not able to sell it. So, sir, my last suggestion or question is that, when it was that you have we were banned for 2 years, it should be made public. After very long time, we shareholders came to know. It is why, as you are showing a good interest, good governance. As good governance, you should have told it to the press or to the BSE that it has been done. Okay, some persons have got this benefit. So please, as you are, we are hoping that you are doing a very good governance. So please, all these matters should be made public at the earliest. So this is my request. Any comments on that, sir?
Thank you. We will keep that in mind for the future. Thank you. Yeah.
All right, sir. Thank you. Thanks a lot.
Thank you. The next question is from the line of Saket Kapoor from Kapoor & Company. Please go ahead.
A very small point on the raw material front, sir. I just missed. How is the sourcing done currently, sir? Since you are telling that from Indian producers, we have already started initial dialogue and some testing quantity. So, from whom are we sourcing the same, and what is our annual requirement?
So, annual requirement would be around about 30,000 tons.
Okay, sir. Our annual requirement is 30,000 seamless tube.
Yeah. Consolidated will be much more. So, yeah, around, you can say about 45,000 tons.
45,000 tons. And from where are we sourcing it?
So mainly we are all sourcing from China.
Okay, sir. Now, and with this embargo feeling and all, with the Chinese trade and all, do you think that going forward, with one or two of the Indian companies giving the certification and putting the same thing domestically, it will be better for you to source the same?
Welcome that. See, we welcome that. We welcome that, local companies can supply us the raw material. That will be the best thing that can happen.
Yeah. Right, sir. So just a very small understanding that 45,000 ton is the requirement to generate 7 lakh cylinders.
Yeah, but see, there are a lot of, even cylinders manufactured in the US, Dubai, all that. I'm taking all that. So it's very difficult to give you a number, but that, you can just simply take the number. Because, some cylinders are very large. Like in the US, they're making a very large size cylinder. One cylinder may be around 4 tons. So, it's very difficult to, kind of put in a number saying that, this many quantity, this much tonnage.
Okay.
Yeah.
No, I was just looking at the conversion part only, sir. Just to understand the conversion ratio.
See, all cylinders a lot of cylinders have different weights and this and that. So, it's very difficult to, simply just give you a number. How the tonnage is, being, how do we drive the tonnage?
Very small point again, sir. Just going on the initial pillar, as you told that now sourcing from domestically would be much easier and also economical for you. By when, sir, can we look forward to close the things totally for domestic, if and any? Are we looking in that direction, or still things are in so nascent stage that no commitment can be relied upon? Depending upon
it's a nascent stage only, you could say.
Okay. And certification and all, still everything is pending?
Yeah. Certification, yes. That will take some time, but, yeah.
Right. Sir, as you are conducting these calls and giving us a brief, complete understanding of the business way forward, what other steps, sir, is the management taking into account to build investor confidence and create shareholders' value going forward? Because, sir, as of if you look at your shareholding pattern, we find therein the absence of marquee names, whether it's the FPI domestic, whether it is anchor investors. So I think a lot of work and a lot of consistent numbers has to flow down over a period of time. तभी सर वो confidence building exercise complete होगा. That is what my understanding is. So
yes, of course. So that is why, if you see consistently over the last 5 years, company has been consistently being profitable. So I think we have now, we have been consistently giving numbers and being as transparent as possible, to the investors and, to our shareholders. So I think, that you will find that this will continue as a practice in the company. And, now that the company is also going down the dividend road. So I think there is a complete, I think, we are in line with the investor requirement. I think we are very much in line with, what the investors. We are continuously talking to investors. We are in communication with them, understanding what they are, what are the needs that they need for us to, as a business to disclose, and what are they looking for, continuous communication. So we are continuously doing that.
Right. And two very small points. The first point is out of the total employee cost annually, how much is being paid to the promoter directors, sir? Out of 89 crore, I think so that is the annual figure.
Maybe about 1.2 crores.
That is the total amount that is being paid.
Yes. You think it's less?
Didn't come again, sir?
I said, do you think it's less?
Sir, actually, sir, it is a good understanding that, sir, in many cases we have seen in the companies, small companies, that they keep up the percentage depending upon the profitability and then give a cap of say 10 or 15 crore. So easily, sir, जिस समय profit आपके better होते हैं तो 10-15 करोड़ आराम से निकल जाता है कंपनी से. उसी लॉजिक से मैंने पूछा था.
Yeah, we have kept everything for our shareholders.
हाँ. Right, sir. And sir, if we take the capacity, if Petronet LNG से जिस प्रकार से expansion कर रहा है, उससे कोई link अपने cylinders की requirement में पे बनता है क्या?
See, obviously, these are all initiatives on gas infrastructure. Definitely, any expansion on gas infrastructure will directly or indirectly help us.
Right, sir. These cross-country pipelines and all, everything will add to our.
Yes, exactly. More and more stations, more and more gas availability to smallest parts of the country, to rural, urban areas, more and more, pipelines. That will just help put more CNG infrastructure, easy reach of, gas everywhere will definitely boost our business. This is why we are continuously, you see in the last 3-4 years, the company has been growing only because the CNG business has been growing so rapidly.
Right. And you told that in the presentation 50% is the market share. Who are the other players in the listed space do we have or in the unlisted?
They are all unlisted space.
Unlisted, and you are having the majority share. 50% is the highest, I think so.
Right.
Correct, sir. So we hope for better times. And sir, any impact of this COVID second wave on our operational numbers for the current running period, sir? Or are we running utilization level?
I think the second wave we were more prepared. So the manufacturing activities, I think, obviously there were definitely a lot more the precautions that we had to take during the second wave, but we are much better prepared. After the first wave, I think we learned a lot. That how we have to continue to run the operations in a smooth manner. So I think we were able to manage the second wave much better, much better than the first wave. And there was no real lockdown at the manufacturing. Like in the first wave there was a lockdown.
Right, sir.
In the second wave there was no lockdown as far as manufacturing activities are concerned. So I think it was better managed than the first one. Right. And people also now are kind of aware. And vaccine was, we had definitely taken the initiative to give vaccines to all our employees. So, we did all the initiatives of, that we could do, and we that had been learned from the first wave. So I think, much better.
Right, sir. So you gave the mix 60% CNG. So out of this 40%, how much goes to the industrial gases and cylinder? And do we count Linde India also as our customer?
Yes, as industrial, yes.
We are catering to Linde India. So there the requirement I think so are of very larger size cylinders. These are not since I think so those will be catering to the steel plants and all.
No. See, Linde is in the business is a different business, but Linde is they are manufacturing gas, so we are supplying cylinders to them.
Cylinders, yes, sir. That is what I'm asking. But their requirement and the size would be very different than what.
No. They are usually they have some higher pressure requirements sometimes.
Okay.
Yeah.
It is not about the size, sir.
No, it's not about the size. Yes, they use standard.
Only the pressure. Okay.
Only the higher pressure, different material kind of products they require.
Right. Thank you, sir. Thank you for answering, sir. And if anything we have, we will approach CDR for.
Sure. Thank you.
Thank you. We take the next question from the line of Vishal Asalekar from Apex. Please go ahead.
Hello, sir.
Yes. Hello.
So how do you see growth in this quarter, second quarter and third quarter?
I think it's quite consistent. We are, the growth is there.
Yes. But the number-wise, see, actually, your consistency is consistent improving. But the thing is, industry-wise now, this COVID will go down simultaneously. Okay. So your benefit from this oxygen cylinder for this medical industries and everything will come down, right? 2%. Okay.
Correct.
So are you planning to divert these things from how you are planning to reduce this gap?
So we will definitely move more capacity towards CNG. If the industrial, but you have to keep in mind that we are catering to a wide range of industries. It's not only medical oxygen.
Yeah, but
we cater a large. So this business was CNG is definitely a fast-growing business, but we've always had a large content of industrial cylinders even before COVID times. So COVID was a special time only for medical oxygen cylinders, but otherwise also we cater to industrial gas cylinders. As a regular, there's a lot of demand for industrial cylinders anyway on a regular basis. So I think that could come back because that has not happened in the last 6 to 8 months because of this COVID situation. So industrial cylinders demand has been quite subdued. So I think it would be probably coming back once this COVID situation is over. Maybe in the next 6 months you'll see that coming up in a quite, because India, industrial demand is completely with the economy. If the economy is doing well, the industrial demand will continue to do well. So we feel that industrial demand will definitely be there. It is going to be there, and as the economy grows, you will see that number also. So I don't think that this should go anywhere. It's always been there. It has always been there with the company. It will continue.
Okay. Thank you.
Thank you.
Thank you. We take the last question from the line of Prakash, an individual investor. Please go ahead.
Hi. Sorry, I intended to ask this question in the first row, but I missed it. Just, an apology if I have not read the annual report in as much depth as I was actually suffering from COVID. So I could not really, make the sort of reading everything. One thing on capital, cost of capital rationalization. And I heard in the call you saying that you have a lot of cash in hand, and which is, keeping the working capital limit and all free. And I understand that the cost of money for businesses has come down substantially because obviously the banks are flush with funds and the very few borrowers, good borrowers, and obviously EKC is one of the best borrowers in the market today for you having returned the money of Yes Bank. There are jokes about people who take money from Yes Bank. So with that in mind, I just wanted to know how much of foreseeable utilization you see of your cash in terms of funding equity for all your growth plans, and if you have surplus cash, and I recollect that you have some lending to the business from the directors or the promoters, and you're probably paying some interest on it also. So how much of that differential or interest is there, and do you have any plans of rationalizing that to an extent, and bringing it? First of all, is the cost of the difference in the case of the cost of borrowing from bank versus what you pay to the directors, and do you have any intent?
We've already rationalized that. We've already rationalized to the bank rate. So whatever we borrow from the bank rate is the same rate that we give to the promoters. Mm-hmm. So there is no difference in that. And what's happening is that today the cash flow is there to sustain even the growth and keep enough money in the company. Mm-hmm. So we have the funds, and the business is doing well. So there is, definitely, yes, you're right. There is enough cash flow in the business.
Yeah, because your outlook is also very strong, right?
Yeah. So we'll use all the long-term funds for the long-term issues, like the promoters. So the money that is come on a long-term basis, like China and other things, will be used to pay the promoters, which are the long-term debts. But otherwise, for the short-term debts, I don't see that being much of a challenge for us.
No, not challenge. In fact, I am in fact saying that. Typically investors don't like cash to be kept idle in businesses, right? So either they should be, either that should go into investments, equity funding of investment, or it should go into dividends, or it should go into retiring the debts of the company. So the point that I'm saying is that if you have surplus cash on your books or in your banks, why don't you consider, and this is surplus of foreseeable future investments that you intend to make, you should consider, retiring debts, and especially
that is the plan. That is our plan to retire all the promoter debt, whatever funds are available. We'll definitely be doing that.
How much is the promoter debt in the company right now?
I think around 50 crores.
50 crores. So that's almost like one third of your total debt. I think the bank debt is 130 or 140 crores, something like that, right?
Yeah. Those are short-term debts.
Yeah, because you see, as an investor, you see, the first thing that comes to your mind, and this is from also because of the legacy issues of the Indian promoters within inverted commas. Typically, one would like to believe that the promoter of the business is there to manage the business and not lend to the business. That's not the primary business of the promoter, right?
Correct.
Primary business of the so any debt from the promoter to the business is like a red flag for a typical arm's length investor.
You're right. Correct. You're right.
Which kind of if you were to prepare a checklist for your roadmaps to marquee investment investors, which one of my fellow investors raised in the call, that why we don't see some good marquee investors on the list of investors into the company, which is doing spectacularly well, is in a leadership position, is in one of the core infrastructure sectors, so on and so forth. Then I think these are the red flags that you need to address on priority. I mean, you said that you started the pathway of dividends, which is a very good thing to do. Similarly, if you address these kinds of things, then I don't see any reason as to why you will not quickly find marquee investors on your annual report.
Right. No, definitely that's a good point, and we'll definitely take it under consideration and see that we'll work on this.
Because it just simply in the mind it creates inconsistency, because the promoter is supposed to manage the business, not lend to the business, especially if the business is having a lot of cash.
Yes.
Okay, I somehow wanted to be the last one in the call.
Thank you.
Okay, thanks.
Thank you. I now hand the conference over to the management for their closing comments.
Thank you once again for your interest and support. We continue to stay engaged. Please be in touch with our investor relation team, CDR India, for any further detail and discussion. Thanks again, and looking forward to interacting with you all again soon. Thank you.
Thank you. Ladies and gentlemen, on behalf of Everest Kanto Cylinder Limited, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.